The SEC is absolutely crushing crypto in the United States, and it is now their mission to shut down crypto forever. Not so fast. Don't let the doom and gloom, don't let the headline scare you. This isn't going to be the end of the world. Let me explain. So, over the last few days, we saw news come out that Kraken was forced to shut down its lending protocol and all of its staking services for United States residents. Now, not only that, though, they are also forced to pay the SEC $30 million as a fine for what they described as selling securities. Now, this happened one day after Brian Armstrong, the CEO of Coinbase, came out and said that he believed that there were rumors that the SEC was on a mission to shut down staking for US residents, and this kind of did confirm those suspicions. Now, of course, because of this, the whole crypto market has tanked. We saw Coinbase's shares fall like 13% in just a day, and so obviously there has been a bit of an impact on the market as people are getting more nervous. But my whole goal here today is to talk to you about why there is some benefit to what we're seeing and why this could be something that is not as detrimental as people are making it out to be. So first and foremost, let's talk about the bad part. Yes, this is not good for something like Coinbase or Kraken. We of course know Nexo is shutting down for US residents and things of that nature. And as that does happen, that does pull a little bit of money from their overall exchanges, which does then kind of hurt crypto overall, unless that money is then diversified out to the smaller fish, which is a possibility. So from that perspective, there is some negative to it, and people aren't going to be able to make as much money on, these centralized exchanges. But let's talk about the benefit, because in my head, the benefits do outweigh the detriments from this. Now, first of all, let's talk about from an institutional perspective, regulation does lead to more opportunity. And what I mean by that is, though many people don't like to hear it, and this is going to piss people off, I don't care. One thing you have to understand is that some of the bigger fish that will fund billions and hundreds of millions of dollars into crypto want regulation. They want to know that they're putting their money into places that they can consider safe and have a very, very low risk of seeing some type of collapse. So they don't want to be putting their money into the next Celsius or the next BlockFi or the next Voyager, one of those platforms. And by having this regulation come in and say, hey, Kraken, you can't offer 24% annually to people, that just does not work. It does open up doors of opportunity for institutions to say, oh, well, crypto is becoming a safer place because some of these bad actors are getting erased. So I do believe that in the long term, this will be beneficial. And I do believe regulation will be important for mass adoption. But many people are going to say, well, Tyler, that's not the goal of crypto as a whole. We don't want to see the institutional investors owning everything. And although that is true, you have to understand that whenever you see a market hitting $1 trillion in market cap, it is going to take institutional investments from that point forward to see further continuation if you really want to see another bull market rally like we have seen in the past. But there are even beneficial things from the other side of being a more hardcore crypto fan. One thing you have to understand is that when something like Kraken goes down, whenever something like Coinbase's staking programs go down, that opens up the door of opportunity for platforms like Lido, which are these lending protocols that are completely based on DeFi, which are usually anonymous. And what happens is that when that happens, that does take away some of the centralization from the staking protocols on chain, and it starts to spread it out amongst the smaller fish, which is beneficial for the ideology that crypto is for the people and that it is a decentralized entity. And so overall, although this could cause a dent, I think the bigger picture here is that this is rather beneficial for what could be the future of crypto moving forward for the people, and allowing us to be more in control of our assets and control of the processes in which our cryptos go through to make more money and to make more returns. And so again, I do believe that yes, this may cause a dent. It may not look good. Coinbase may lose some money. Kraken may go down. Who knows? Nexo had to shut down services. So there is going to be pain, and there are going to be these moments where the market's not going to look good. But if you keep the bigger picture in mind here, this realistically doesn't do anything but act as a speed bump for what is crypto as a whole. So I would love to hear kind of your input here. I know some people are saying that, yeah, this is just the first step that they're going to take to controlling crypto as a whole. And maybe you're right. But at this given point, it doesn't seem as if that is what their goal is just yet, but rather opening up the doors of opportunity for institutional investors to enter into a safer space than it is now. And honestly, understandably, when you see millions and billions of dollars getting burned by FTX in one day, maybe regulation isn't the worst thing that can happen for crypto going forward, especially whenever there are bad actors lurking in that nature. So I would love to hear your opinions about it. I know this is a quick video, but it's the weekend and I want you to kind of spend some time away from the doom and gloom. So make sure you do like this video if you did enjoy, and make sure you do subscribe for more updates just like this one. If you do like my opinions, I do have a free newsletter that I send out twice a week if you'd like to subscribe. And with that said, I will see you all next time. Peace.